researched. So, you're getting the facts. You're not just getting my opinions. But, always take what someone else says with a grain of salt and do your own research if there's anything that you have questions about. So today's video is going to be all about saving for retirement, and I'm going to be talking about the different types of retirement accounts that can help you save for your retirement. If you all like this video, let me know, and I can make another one that kind of goes more into details about where to invest your money once you have them in these retirement accounts. Retirement accounts themselves aren't an investment, they're more of an account, it's in the name, where you put your money, and a lot of times retirement accounts have a lot of tax benefits or employer benefits, and that's why you would want to choose that account over just like a typical brokerage account. So I'm gonna start talking now, and if you see me look to the right, it's because I've got my notes over here, okay? So the first main type of retirement account that I'm going to talk about is a 401k. So a 401k is usually offered through your employer, so you need to check with your employer and see if that's something they offer. So in 2021, the IRS allows you to contribute up to $19,500 a year to a 401k if you're under 50 years old. And then if you're over 50 years old, you're allowed to put in up to $26,000 in the account. Now, the really cool thing about a 401k is that a lot of the times your employer will match a certain percentage of the money that you put in there. So let's say your employer matches every dollar you invest up to the $5,000 mark. So if you put in $5,000 of your own money, you're basically getting $10,000. And a lot of people recommend that the first place you invest your money for retirement is in an account that your employer will match. Like I said, not all employers do this, so you have to check with your specific workplace. But the reason it's so cool is because it's basically like guaranteed money. So this is definitely the first place I would recommend investing. Like I know where I had my internship this summer, they matched I think 75 cents to the dollar up to $5,000. So just by putting your money in an employer-sponsored 401k, you're getting free guaranteed return, which is huge. So definitely take advantage of that. So the amount contributed to your 401k is also deducted from your taxable income. So if you make $70,000 and you put $5,000 in your 401k, you're only going to pay taxes on $65,000 instead. You do need to start making withdrawals from the account, known as required minimum distributions, starting at age 72. And when your funds are withdrawn, they are subject to taxes. And if you take your money out before the age of 59 and a half, you might face penalties. So that's the important thing to know about most retirement accounts, is the benefit is that you get to avoid taxes either when you put the money in or take the money out. So in this case, you get to avoid paying taxes when you put the money into your 401k, but you do have to pay taxes when you take the money out. However, you have to wait until a certain age. Obviously, this account is for retirement, so they want to encourage people to leave money in there until they are of retirement age, which is why you'll get a penalty if you take it out before the age of 59 and a half. Now, there are also some more like niche retirement accounts that I'm going to mention here, but I won't go into a lot of detail, but I'll briefly cover them. So if this rings a bell or this applies to you, you can know that it exists and go look more into it on your own time. So a solo 401k person who is basically self-employed, an individual business owner without any employees, and you're allowed to make contributions of up to $58,000 in 2021, which that's a lot of money to be able to put into the accounts. And obviously with a lot of these accounts, maybe you can't make the maximum contribution. $58,000 is a lot of money to put into an account in 1 year, but that doesn't matter. You can just contribute what you're able to. So a solo 401k is something you might want to look into if you are self-employed. There's also something called a 403b if you work for a nonprofit or a tax-exempt organization, and this is very similar to a 401k, so you might want to look into that if you work for a nonprofit. And then this is something I don't know a lot about. It's called a 457b, and it's offered through state and local governments. It's kind of similar to a 401k in the description here, so I'm not exactly sure what it might be like an additional account that you can use, but you might want to look if it is offered in your state or local area. Also, I haven't said this, but everything I'm talking about here is United States centric, so if you're in another country, I have no idea how this applies to you. I'm sure other countries have similar things, but sorry, this is just not the video for you if you don't live in the US. So now I'm going to be talking about IRAs, and I actually have a whole video specifically on IRAs. That is my first personal finance video that I will link below. If you want to really go into the details about what an IRA is, that video is for you. But I'm also going to cover it here a little bit. Okay, so an individual retirement account is an account that you can open yourself. You don't have to open it through any employer or anything like that. The only catch is the money you put into an IRA has to be earned income. So it has to be money that you made through your job legally. It can't be made like under the table, like pet sitting or babysitting, unless you do that in like a legal way or you pay taxes on it, is what I mean. It also can't be like money that would be gifted to you. You're not allowed to use any of that. It has to be earned income. But basically, the contribution limit for an IRA is $6,000 in 2021 or $7,000 if you're the age of 50 and older. Likewise, you will get penalties if you take the money out of the account before you are age 59 and a half. So there's two different types of IRAs. There's a traditional IRA and a Roth IRA, and they're pretty similar, but the difference is that with a traditional IRA, you don't pay you don't pay taxes on that earned income when you put it into the account. So basically, if you put $5,000 in, you get to take $5,000 off your taxes that year. But the catch is that when you pull the money out in retirement, you do have to pay taxes on it then. Now, a Roth IRA is like basically the same, but it's just flipped. So you're going to pay taxes on the money when you put it into the account. It's not tax deductible, but the pro is that when you take the money out of retirement, when you take the money out of the account during your retirement, you don't have to pay any taxes on it. So how do you know which one's for you? Personally, I have a Roth IRA. That's my favorite one, and I think it is for a lot of people to my knowledge. But generally, the rule is that if you're making less, if your tax bracket is lower now than what you anticipate it's going to be in retirement, you want to open a Roth IRA. And if you're in a really high tax bracket now, but you think you're going to be in a lower one by the time you retire, then you want to use a traditional IRA. So that's all about it would help you save on taxes, basically. I have read some articles that would suggest that a Roth IRA would still be better for you, even if you're in a higher tax bracket. I won't go into detail on that here, but if you're kind of wondering which is for you, that would be something good to look into. It's also important to know for a Roth IRA that there are certain types of income caps. So if you're making up into the six-figure range, you need to check on that and see if you're still eligible to contribute to a Roth IRA. Some people maybe aren't allowed to contribute the full $6,000, but they're allowed to make partial contributions. So if you are making six figures or more, just look into that and see how that affects you specifically. There's also something called a self-directed IRA, which is pretty much the same thing as a traditional IRA, but it allows you to make some more non-traditional investments or alternative investments, such as cryptocurrency, precious metals, and real estate. So if that's something that you're interested in investing in, you should definitely look into a self-directed IRA. And then there's something called a simple IRA, and simple is an acronym for Savings Incentive Match Plan for Employees IRA. And this is if you work for a small business with 100 or fewer employees, and it looks like you can contribute more into this account than you could a traditional IRA. It says you'll be able to contribute up to $13,500 in 2021. So if you work for a small business, this is definitely a type of IRA you should look into, called a simple IRA. And then there's something called a SEP IRA, which is called a Simplified Employee Pension IRA, and it's designed for small business owners with several employees and self-employed individuals. So if you are the boss of a small business or you work for a small business, this might be another thing to look into and see what's offered for you. Now, the next two things I'm going to talk about aren't retirement specific, but they're also types of accounts that can help you save for your retirement. So, the first one I'm going to talk about is a health savings account, and this is often abbreviated to be called an HSA. And basically, it's funds to help you cover the cost of your health insurance during retirement. There is a catch here. You have to have a certain type of insurance plan. It says you need to have a high deductible health insurance plan. But basically, in an HSA, you can contribute money into this account that is tax deductible, and then your funds grow tax-free, and they can be withdrawn tax-free if they are used to pay for your medical expenses. And you're allowed to contribute up to $3,600 in 2021 as an individual, or $7,200 if you have family coverage. So basically, this is a way that you can pay for your health insurance costs without having to pay for the taxes surrounding it. And then the next thing I'm going to talk about is just a traditional brokerage account. And a brokerage account is a type of account that you can open to invest in the stock market. The only difference is that it doesn't offer any of the tax incentives that a Roth IRA or a 401k is. So you do have to pay taxes on whatever money you put in if it's earned income. But the great thing is that you're allowed to put gift money in this account. So let's say your parents or someone gave you $1,000, you would be allowed to put this money in a brokerage. Now, when your money grows and you want to take it out of the account, you're also going to have to pay taxes on it, up to 20%. But the good thing about this account is that you don't have to wait until a certain age to take the money out. Now, usually people suggest that you don't invest money in the stock market that you want to use in the next 10 years. years. But let's say you are 25 now and you have money that you want to invest because you don't think you want to touch that money for like 15, 20 years. But at the same time, you think you're going to want to pull that money out before you're of retirement age. Then a brokerage account would be the way to go for you because you could pull that money out at any time. So there's also not a cap of how much money you can put in a brokerage account. So if you've maxed out your 401ks and your Roth IRAs, or you just want to invest some money that you think you want to be able to touch before you're of retirement age, then a traditional brokerage account could be a great option for you. And you don't have to have any one of these accounts. Personally, I have a Roth IRA and a traditional just brokerage account. And I'm sure when I get a job, I will probably open a 401k as well. So you can combine all these different account types together and, mix and match and contribute to them in the way that best suits you and your financial and life goals. Thank you all so much for watching this video. If you enjoy these personal finance investing type videos, please let me know. I'm thinking the next one I'll make is about where to invest the money that you put in these accounts, different ways to invest it in the stock market, for more of a passive investing strategy. If you're not someone who knows a lot about the stock market, you can still invest your money in it and get long-term gains in the stock